Hey, Amanda, how's it going?
It's going well, Charlene. How are you?
I'm doing well. I'm doing well. So we have a lot to talk about today and some exciting news, and it's been coming out like weekly almost without us asking, right?
Yeah, it's been coming out as surprises to not only the general public, but also as mortgage professionals, who is going to make things a lot easier for us.
Right. And us real estate agents as well. So before we jump into it, I'm going to introduce myself. My name is Charlene Williams. I've been a realtor for 15 years, and I'm currently with Real Estate Homeward. And I'm going to introduce you to the lovely Amanda. Go ahead and introduce yourself, Amanda.
Thank you, Charlene. So my name is Amanda Pivar. I've been a mortgage agent for 11 years now, and I am with Mortgage Connection. And like Charlene said, there's been lots of changes, and we're excited to share them with you.
Okay, so we are on a clock, so I want to get right to it and get this all um, explained as much as possible. So first things first, the 30-year amortization.
Yes. So last week, the government released a statement that now a first-time home buyer is able to qualify for a 30-year amortization when qualifying to purchase a home. This is huge. Right now, we're only able to qualify someone with less than 20% down payment with a 25-year AM, but now we can do it to a 30, which will really help people with getting into the market. And also, once in the market, make it more affordable on a month-to-month basis.
Right. So that's a one good thing. I mean, there's several to go through, but that is a very good thing, especially for buyers that are looking, maybe they have a little bit of leeway in terms of you can give them a 25-year quote or you can give them a 30-year quote, right?
Yes, and I do think it will be a lot of 30-year quotes for sure versus 25 because not let alone when you're a first-time home buyer, you want to maximize your affordability to keep yourself competitive and open up options in the market. But more importantly, you want to keep your monthly expenses affordable so that you're not having noodles every night and can still enjoy your life and not be house poor.
That's correct. Okay, excellent. So moving right along, there is I believe it was the CMHC
That is
that said raised the limit of insurance from 1 million to 1.5 million.
That
Can
is
you
correct. This
explain?
is huge and something that we've been asking for so long because so CMHC as a whole, they represent all of Canada and they've always done changes that would affect everybody, which isn't fair because you have markets like Toronto and Vancouver that are really booming and you can't buy something for under a million usually. It's all over. So they've now officially increased the max loan amount with, or purchase price, sorry, with CMHC up to 1.5 million. This is going to open up the door for a lot of people. We don't know the exact way they're going to break down payment quite yet. Right now, down payment is 5% on the first 500 and 10% on everything up to 999. So we're not sure if that will now go up to 1.5, but still, regardless, it is awesome news that will help people be able to afford. We see, especially in Toronto, a lot of young professionals who have two incomes in a household that are making enough to be able to afford these properties, but saving has been harder. Now they'll finally have an opportunity to actually get into the market.
Right. So I've heard two things about this very change in terms of CMHC. So what I've heard, number one is, does that mean that homes in Toronto, places like Toronto and Vancouver are more expensive than it was when they first started this? I think it was 2012 they first started this. So what does that say about people being able to afford homes? That's the first thing I heard. The second thing was that we never asked for this. We asked for 1.25, but not 1.5, like they took it upon themselves to, increase that amount. Have you heard the same things that I'm hearing?
Yes, so I did know that the 999,000 is a very old policy that is very outdated. That's 12 years behind the times. Uh,
Hmm.
the 1.5, I think that was just a reasonable thought. At 1.25, still doesn't really get you a whole lot in Toronto and Vancouver. I think the government really looked at where pricing was, inflation, where numbers have grown in 12 years. And I think 1.5 was the appropriate number to put it at.
Okay. All right. And then there's another one. We're moving along quickly
Yeah.
here. There's another announcement that came out. So
Yes.
explain that to me because I got a message on my phone and I looked up Facebook and people are chit-chatting about this. And I think it has to do with, you know what? You go ahead.
Sure. So over the last couple of years, one of the biggest issues we've had, which we haven't in the past, is when someone's mortgage up for renewal, we like to get them options and look at other lenders to lower their interest rate or find a better product that suits their needs. When we've had this large increase in rates, not everybody's able to take advantage of this, and they're stuck just renewing with their lender at whatever rate they offer because they don't qualify to actually move their mortgage. Now, anyone who is up for renewal and transferring their mortgage to a new lender no longer has to qualify on the stress test. This is huge. It's taking away a 2% increase that someone would have to qualify on and just qualify on the actual interest rate, which is fair for the consumer, in my opinion, because it opens up that door to options again. I have clients that unfortunately had to lock into these crazy high rates because that's all they had the option available to them, and lenders knew it, and some took really advantage of it, but they will no longer be able to.
That's amazing. So, I mean, these are all changes on a federal level. Is that correct?
Yes, correct.
And we know what's going on with the federal government, that, it's a possibility that they may call an early election or even an election next year.
Yep.
I'm saying to myself that just because that may be the case, it doesn't necessarily negate the positive from these measures, right?
I think it's something that they had to do. There's been a lot of negative that have come out within the real estate market over the last year and a half, like with new capital gains, that the government really needed to help consumers have a win. And these are wins that they have given us that are really going to help our housing market. It's very convenient. They also did it as our rates are decreasing. I think the new changes that are coming up, as well as a decreasing market, should make for a very interesting and hopefully busy 2025.
Well, I'm looking forward to that. So, what's going on in your market? Are you busy?
It's an interesting busy for sure. I'm seeing a lot more pre-approvals come out, which is fantastic. People are still a little gun shy, and I think these new policies have paused a lot of people. A lot of my first-time home buyers with less than 20% down payment, they're sitting on the fence. We are updating pre-approvals on December 15th when the new policies come out because they want to wait. I think that's a mistake. If you have the money right now and you're able to purchase right now, you should. There's so many people who are going to be sitting on the sidelines that are going to come to the market come January with these new policies that we're just going to start to see a crazy market again.
So, let me ask you this. Is the 6-month mortgage still a thing?
Oh, I still love the 6-month mortgage. It's a great option. I actually have a couple clients who are up for renewal next month on it. And when we were doing rates in March, we were in the high fives. My clients are now renewing in a low four. So yes, and the 6-month mortgage, not only is it great for when it comes up for renewal, right now we're qualifying on 3.94%. That is really helping with people maximizing their qualifications.
That's amazing. I hope it's around when I come up for renewal. Anyways,
Now, the
any
6-month mortgage, though, it's only for anyone who is purchasing a property with less than 20
okay,
down payment.
so not renewals.
Unfortunately, not.
Ugh,
And I don't think
so
they'll
many
change that
rules.
either. I know.
So many rules. Okay, this is great. Do we have anything else to talk about?
Those are the important things. I think it's great
Right.
for the changes that have happened. I know you and I have a joint marketing piece that we did together. So if anybody would like a copy of it, please do reach out to either Charlene or myself, and we're happy to get it over. And it just really breaks down the new policies.
That's excellent. I will put a link on my YouTube channel so that we can get some people asking and I can send it out. Absolutely.
Sounds good. Well, as always, Charlene, I love doing these calls with you, and thank you for doing them with me. And I'm looking forward to our next one. And who knows, we might have some new changes between now and then.
Right, between now and a month from now. So we're hoping.
Yep.
And if not, we will chat in a month from now because I'm pretty sure they're going to put it down and I think it's going to be 0.50.
I agree. I'm definitely hopeful that will be the case.
Okay, great. Take care, Amanda. Thanks for chatting, and we
Okay.
will chat soon.
Talk to you soon.